Hi there. If you've watched any of my other videos, you know that I usually talk about a specific topic, but today I wanted to try something a little different. I've had a lot of viewers ask me about how I determine buying and selling levels and why it is that I invest in what I invest. So I thought it might be interesting if we did something a little bit more unscripted, where I go over the investments in play portfolio, which is my flagship portfolio, and I show you what I do every day. Now, if you're a long-term investor, you don't need to do this every day. You could do it once a week and maybe even once a month. I review every position. I find the buying and selling levels that I want to have, and then I put those orders in. So this is what I do every day, and I figured I'd walk you through the process and talk to you about each position. If this works out well, in the future, what I'll do is actually live stream this. So if you do enjoy the content, please leave a comment telling me either to forget about this and don't do it again, or if you want me to, we could actually start doing a live stream. But I'm going to record this so that I can edit out any of the parts that might get boring, because I don't know how long this is going to be. This is just an experiment. Figured we'd do it. So let's just get started. So first off, you'll notice that I'm in TradingView. Now, you don't need to use TradingView as a charting application, but I do. I like it. I find that it has a really robust tool set. And you're going to see that when I go through each one of these positions, I don't really even use all of the tools. Instead, I use mostly support and resistance levels that I find by looking at the chart over time. And that's how I do what I do. It's really that simple. I get familiar with a stock over time. I know about how much it's going to pull back, how much it could pull back, worst case scenarios. And then I make a buying plan and a selling plan based on that prior knowledge. It all starts with figuring out what company I want to work with. And so we're just going to go in no particular order. It's alphabetical. The investments in play is actually split up between two different brokerages. Or two different accounts, I should say. My two main brokers are Charles Schwab, which is my absolute number one main broker, and Vanguard, which I use for a lot of my ETF portfolios, which I don't currently trade publicly just because there just doesn't seem to be a lot of interest from anyone in talking about ETFs. But again, if you would like to see what my ETF portfolios look like, leave a comment. So the first one is Amazon. Amazon's obvious. I got into Amazon back during, I'm looking it up. Here we go. I'll include this file somehow in the editing. We'll see what happens. This is what I actually release this every week. This document is released every week on my getirked.com and my Substack, which is getirked.substack.com. And what it's showing you is every single position, in this case, in the investments in play. I covered two other portfolios publicly, the speculation in play portfolio and the pandemic portfolio. And all of them have something that's similar to this. This shows you the lifetime position performance. In other words, how well has my position done over time? And if you look closely at it, you can see that here's Amazon. And my first buy was on February 6th of 2018, which was the middle of Volmageddon. I saw that everything was selling off huge. I'd wanted to get into Amazon for some time. It had a huge sell-off. And so I made my first buy at $69.15. And you can see that my current per share cost is $49, which means over time, I've bought below my cost basis and sold above my cost basis to the point that I've lowered it by that much. And it's currently up 210% from the current cost basis, which is $69.15. Amazon I got into because of both of its e-commerce, but also of its cloud play. It's huge in cloud, and it's been developing it over years. It is a leader in the space. I wanted some exposure. That being said, it's not a full allocation size in the portfolio. I release this every week too, and this shows you how everything breaks down in the investments in play portfolio. And you can see that Amazon's actually in a basket with 6 other positions, which I call the old spec basket, the old speculative basket, because none of these are really brand new. And you'll see that ARM Holdings is in here, but that's because ARM Holdings has been around as long as NVIDIA, since the early 1990s. The only reason it's new is that it just came public again. It was bought by SoftBank and taken private and then came public again. And what I do with these different baskets is if it's a stock that I don't have a whole lot of faith in as having a whole position, I'll bunch it up with other stocks that are similar in one kind or another so that I can have more exposure without being overweight in one specific area. For example, I have this pets basket, which is made up of IDEX Laboratories and Zoetis. And I like both of them, but IDEX Laboratories I've been in for quite some time, and it was an incredibly profitable position. And I wanted more exposure to the humanization of pets thesis, but I didn't want to damage IDEX Labs by putting investing capital back in. I've already taken all the capital out, totally profitable position. So what I did in that case was, instead of having one full allocation for IDEX, is I split it up into two, which is shared. It's half an allocation each, one for IDEX, half for IDEX, half for Zoetis, and that's how that one came to be. So going back to the charts, you can see right now it's the 2nd of January, so this is live, and you can see that Amazon's pulling back. Now, you can see there's a whole lot of stuff on the chart, but you really don't need to look at any of that. In fact, we can remove all the drawings and we can remove all the indicators, and you can just look at a candle. I have it set to the daily because I like to look at the daily kinds of support and resistance levels that you can see, and we've seen that it's pulled back a lot. Now, what I'm eyeing here is I'm looking for wicks that are pulled down a lot, like this one here from October, where you can see it's $118.35. And because it's pulled back so far and it hit such a key level of support there, that's actually my next buying target. I'm not in a hurry to add to this position because I just took profits at about $140, $150, and I want it to sell off a little bit before I add to it. If it doesn't sell off, I won't add to it. That's just the way it is. Also, because this position is so small, I'm not looking at selling any until we get back to its all-time high, which you can scroll out and you can see over here, our all-time high for Amazon is up here at $188.11, around there. It's a little bit higher. And that's where I'll start looking at taking profits. In the meantime, if it stays between those two levels, I just won't do anything at all, and I'll move on to the next position. Before we get further, I'm going to hit reload so I can get back all of the stuff that I had before on the charts and not lose any of the things that I've been working on. So next up is ARM Holdings. This one's really relatively new. And in this chart, you can see, oh, we're on the 15-minute because I did reload, so we have to go back to the daily. We have a lot of lines on this chart, but it's not as complicated as you think. The teal line is where the stock opened to the public. The orange line down here was its IPO price when it came public again. The green line at the top is its all-time high at $78.66, and the black line at the bottom is its all-time low. This green line here is my next buying target. I just sold somewhere around $75 recently. And you can see that there's a lot of a price gap between where I sold and where I plan to buy. And the reason for this is, A, I really like ARM Holdings for the long term, but it's still nascent. So it's got some exposure to artificial intelligence, but not a ton. What it is primarily is a company that you can design the processor and use their platform to create the processors. And it's been very popular with cell phones. It's how Apple developed all the processors for the iPhone, things like that. They're developing it now into being an artificial intelligence platform, which is interesting. Lots of upside potential. But because it's so new and it had significantly more debt than when it went private, you have to be careful because it could be very volatile. And so what I've been doing since I got into it was to buy and sell in stages to make sure that I was protecting against any of the volatility. And you can see already I've gotten, my first buy was on the 14th of September when it came public again at $57.28. But because I've taken profits on the way up, my current per share is actually $37.73. It's a lot lower than where it's currently trading today because I sold above my cost basis. When a position is this new, I don't mind if it's too small. In fact, I always say I'd rather have a really small profitable position than be all in a position and have it sell off dramatically and me have no capital to put to work. So you can see, even though its all-time low is at $46.50, back in November, it pulled through here on October 30th, and then again on the 31st, and it found support above it. So what I want to do is buy a bit above that support, but I'll only be replacing some of the shares I sold. Again, if it goes higher, I've got a sell target up at $100, which is just the just under $100 here, which is the psychological round number. Traders and investors love round numbers. And so when it gets up to $100, some people will actually just sell because it's getting close to $100. And that's what I'll do if it gets there. If it doesn't get there, and again, if it trades between $47.43 and $100, I won't do anything until it makes a bigger move. In the future, I may raise my price target if when it sells off, it finds support above that price target, but I won't do that until it finds support above it. I'm pretty sure it'll pull back. I'm expecting it to get that low. Next up is Dutch Bros. If you're not familiar with Dutch Bros, pardon me while I take a drink. I told you it was unscripted. Dutch Bros is a coffee and energy drink maker that got its start in the Pacific Northwest, and it came public in 2021. I moved to the Pacific Northwest in 2007. I've been watching how popular this chain is. It's just really off the chain. Sorry, I had to. But it hadn't come public. And so I've been watching it for a really long time, waiting for it to come public. And so when it did come public, I opened my position on the day of it coming public. And let's take a look. Where am I today? I'm down as of last week in Dutch Bros. My first buy was on the 20th of September of 2021 at $42.25. And because I took profits above that and bought below it, I've lowered my cost basis down to $33.15. When we look at what Dutch Bros has done in the past, there's a lot going on this chart. The pink lines that I use are just to give me ideas of past levels of support. I'll go back through the time of the chart and find levels where it's pulled back, like this key one here on the 1st of November, where it pulled back to $23.31. And I'll mark them just so that I know without having to go back through years of charts. If we're talking about something like Nike that's been around since the 60s, or Apple, which has been around since the 80s, I'd like to eyeball the support without having to go that far back. And you can see that even though I have a profit taking target up here at $34.10, I'm not going to add back into this position until we get close to where it was on the 1st of November, with my next buy target at $23.56. And after that, if it gets through $23.56, you can see that we have an all-time low here on May 12th of 2022 down at $20.05. So that'll be my next profit, my next add target. And what I do is I buy above levels of support. A level of support will operate a lot like a mattress. So when a stock is selling off, it won't necessarily stop to the penny on that level of support. So some people will actually have buy targets slightly under a previous level of support. Since I am a long-term investor and I believe in all the companies I own, I'd rather get in early and have it sell off more than me miss the opportunity altogether and not be able to buy the stock. So that's why I'm always buying above the cost base. But that's where I'm looking at when it comes to Dutch Bros. Next up is Canopy Growth Corporation. This one is a mess. And you can see now that it's split 1 for 10. And so it was trading at a low of 30 something cents. And now that low is $3 and whatever cents. And the high, instead of being $59.25, is $592.50. This one's a mess. It's the worst position in my portfolio. It's where I got the rule to never turn winners into losers. What I'd done with Canopy Growth, as you go back and you can see, I got in at $295.30 a share. So that was when it came public in the United States back on May 24th of 2018. And I really wanted exposure to cannabis. There were no ETFs at that time, and very few other companies were trading. And at that time, Canopy Growth was considered, there's a cat making noise behind me. Canopy Growth was considered the best in breed in the space, which is why I got into it. And you'll notice in 2018, it rode up into the high 50s twice. It did it once into 2018 and did it again in 2021. And the first time it rode up into the high 50s, which was back here in 2018, I didn't take all of my capital out of the position because I thought, okay, maybe it's making a run for a new all-time high and it'll just keep going, because it was, again, a new industry and there was a lot of hope for it. It ended up pulling back and pulling down in 2020, and it made this low down here at 90 bucks, which was $9 back then. 90 sounds huge, but it was $9. And from 2020 all the way through 2021, it didn't make a new all-time high, but it did get up to $564.97. And at this point, I had actually taken all of the capital out of my position as well as some profits. So I was playing with the house's money. At that point, I considered the investment having no risk because I'd taken all my capital out. But I had so much faith in Canopy Growth that when it started selling off, I kept adding to it on the way down. And not only did I add in all the profits I took out, I added in investment capital. In other words, I went from having no cost basis and profit to having a cost basis again, because I truly thought that it was going to hold this $9 low. And obviously it didn't. It broke all the way through the $9 low, and it broke all the way down to $3.46. And this is where I get that rule from, that you never turn winners into losers. In other words, no matter how much faith I have in an investment, I'm never allowed to put capital back in once I've taken the capital out. I won't do that again. Next up, we've got Coinbase. Coinbase is another mess, but this one, I don't blame myself for this one. I did this one all right. So when we take a look at where I got into Coinbase, it's my second biggest loser. I bought in on the day that it came public, which was April 14th of 2021. And my first buy was at $412.47. It was the only way to get exposure in certain accounts like IRAs that you couldn't buy spot Bitcoin in. And everybody had high price targets on this. I think people were saying it was going to go up to 600. People said it was going to 1,000. There was all this optimism. And you can see on its very first day, it came public here at $381, shot up to its all-time of $429.54, and never saw it again. That was it. That was its all-time high, and it immediately sold off. Now, the way that I take an approach when it comes to an IPO is I buy a really small quantity because you don't know what it's going to do. And that way I can buy in stages on the way down. And I bought in stages all the way down. From its high at $429.54, it sold off dramatically. It went from $429.54 all the way down to $31.55. This is a huge sell-off. I don't know if I've ever seen an IPO collapse that much and recover, but I was buying all the way down. When Coinbase started to rally, from its low in 2022, and it came up, you could see that in February of 23, it actually broke through and got up to $87.63. And I didn't take any profits because I was underwater. I had bought some down in the 30s and the 40s. I had added to the position. I'd lowered my cost basis. But when it got up to $87.63, I didn't sell any. And then it ended up turning around and selling off to under $50 again. So when it made the rally in 2023 and it got up through this level, I decided that I would start selling some of the shares that I bought at a lower price at higher prices on the way up. This is Bowser. He's one of the two cats. And then I've got a dog, and they're going to be pests. Come here, buddy. So I was taking profits all the way up. And by profits, I mean I was selling the shares that I had bought at lower prices, because I was talking about getting 100% gains and more on some of these shares. And so I didn't want it to reverse and sell off again. I wanted to make sure that I actually took those profits. The reason I wanted to do that was because of how volatile Coinbase is. I didn't want it to go up, break through these new levels, and then sell back off again, and me just be sitting there with the same exposure to Coinbase, because I had a pretty decent amount of exposure at that point. So I've been trimming my position on the way up, which has been raising my cost basis. Every time you sell below your cost basis, it will raise your cost basis. But like I said, if you take a look at the chart again, you can see that I took my cost basis from $412.47 and nearly halved it, taking it down to $225.66. Now, at one point, it was near $180, but because I've been selling shares on the way up, it's been raising the cost basis. However, now we've gotten to a point where Coinbase is up at $187.39 recently. Again, pulling back today, as everything is in the stock market. So you can see that my next profit-taking target is up here at $239.76. And the reason I picked that is if you look in the past, you can see that there's just a ton of price action right around $243. You can see that it gets through it, it comes back up. You can see that it's getting resisted. Then you can see that it broke out in 2021, made it up here to a new high relatively, pulled back, hit the support, and bounced around above it, lost the support, and then fell through it. So if it gets back up to this level, there are a lot of people that was their first buy. And even if it looks like Coinbase is headed higher, they're going to sell at that point, as am I, because that'll be above my existing cost basis of around $225. So when I sell there, I'll be able to lower my cost basis and be able to free up that capital that I used buying it to buy again if it sells off. Now, my next buy target for Coinbase is actually at the 50% retracement level of Fibonacci retracement. Now, Fibonacci retracement is this pattern that you can see out in nature, and it turns out that it repeats in the stock market. And it's really easy to do a Fibonacci retracement in TradingView. All you do is you go to the bottom of a move, you hit Alt-F, and then you click, you draw it to the top of the move, and you can see that it will give you these different potential levels of support. It sounds wonky. It really does. I know it sounds like this is absolutely crazy. But if we extend it in both directions, you can go back in the past and you can see that these levels actually have stuff happen around them. You can see there's support and resistance at these Fibonacci retracement levels. Fibonacci is the name of the mathematician who came up with this. He saw it back in the 1700s, and it repeated in seashells and other parts of the world than it does in the stock market. Wherever there's laws of large numbers, a lot of times Fibonacci retracement actually works. And you can see the 50% retracement, which means it's half of the move from there to there, from the low to the high. This is the 50% mark. You can see all of this price action that was happening around it. So this is my next price target for Coinbase. And you can see that my buy target is actually $82.44. So I have several different Fibonacci retracements that I've got playing here, and sometimes they intersect. So even though the big one here is at $76.89, you can see there's another one at $80.77. And if we go back to this day here, you can see that there are key pullbacks. Since I've sold so much of my Coinbase position up higher, and I'm going to buy a very small quantity if it pulls back that far, I'm not going to, I wanted to buy above the level of support. I wanted to make sure that I was going to add some. Now you can see all these lines on the chart, these moving averages that I have. I don't actually use those as much. I want to buy a stock when it's under severe weakness, and it's under severe weakness when it breaks through those moving averages. So if Coinbase pulls back, finds support, and goes higher, then that's that. Whatever my position is right now is whatever it is. And if it gets up to the $240 mark, I'll take profits. If it gets down to $82.44, I'll add. But I also have a buying target down here around the $50.77 mark, where you can see we've had a lot of different key levels of pullback in the past. And then I'm going to buy at $40.83, which you can see we've got some support in the past. And then I'll buy down here at its low. I'll buy a little bit above because it came down to $31.55 on this day. And then on this day in January of 2023, it found support slightly above at $31.83. So my next buy target for Coinbase at that point will probably be about $32. Next up, we've got Salesforce. This is another one of those positions that's sharing a basket. When we open up my allocation, you can see that Salesforce is part of the old speculative basket, again, with Amazon and the rest of them. So it's not a full allocation. And additionally, when we look at where it was bought and where it is now, you can see that Salesforce. So I bought it originally at $134.05 back on June 11th of 2018. And my current per share cost is $88.20, which means this one's pretty profitable at 198.4%. It's nearly a triple. So when we see Salesforce pulling back, you might notice that my next buy target isn't until it gets down to $133.20. So even after today's sell-off, it's almost a 50% pullback. The reason I'm waiting for it to get that low is you can see over time, there's this trend line that I've drawn. Salesforce has been around for a while, and it seems to keep pulling down to this trend line to find support before bouncing higher. So what I'm using here is the levels that it pulled back to in 2022 are a whole bunch of support. You can see this. This is an upward facing trend line. And the reason I've hashed it out like this instead of making it a solid line is there's no guarantee it's going to provide support. But because this is a small position and it's so profitable, I don't want to add to it again because I'll be buying above my cost basis until it comes down to that low. And you can see that the trend line will keep going up as we move through time. So if we get over here, looks like in September of this year, I'll have to start raising my price target to keep it above that trend line. Because once again, I'd rather buy early, get it above support. If it never gets down that low, so be it. I won't add to Salesforce. And you can see that my next sell target is at $309.40, slightly below Salesforce's all-time high, which it saw back in 2021. So I realized as I'm recording this exactly how long this is going to be. This is just the first 6 positions that I hold in the investments in play, and there are a total of 31. So I'm going to cut it off here. If you don't mind hitting the like and subscribe button, I'm not monetized. Every time somebody hits like and subscribe, it really does help the channel out, and it keeps me motivated to keep doing this. My goal is to teach other people how to invest and to do it for free. Instead of like everybody else who's charging for these courses, I think everybody should be able to invest, and they should be able to learn how to do so without paying and without having to worry about being scammed. If you enjoyed this video type and you'd like to see me do the rest of the investments in play portfolio, as well as speculation in play and pandemic portfolio, or you'd like to see me do some sort of a live stream that's sort of like this, please leave the comments below because I read every comment and it helps me figure out the direction that I'm going to take the channel as we move into the future. I'm trying to produce content that's useful for new, intermediate, and even expert level investors. So if there's something you'd like to see more of or something you'd like to see less of, it really helps me create the content that works best for you. If you'd like to see some of my better produced content, you can check out my 2024 investing guide on how to get started and some of the other strategies that I use to buy and sell in stages that's shorter and better edited than this one's probably going to be. Thank you so much for watching, and I'll see you in the next video.